Welcome back to Around the Table with Stacy Smith as we take a look at the economy and investing. And I want to continue the discussion concerning the quarterly outlooks. Kim, you base a lot of your analysis on earning reports. Companies normally report their earnings on a quarterly basis. So what do you expect to see in the next several weeks of earnings reports?
Sure. Well, gosh, I just live for this stuff, I have to tell you. It's a lot of data, and what you're doing is the mosaic theory, which is putting all of these little bits of information from each company that you listen to and putting it together and saying, this is what the economy looks like a mosaic, a mosaic piece of art. So it looks like companies are using their CRM systems to understand what their demand is like, and they have not been hiring aggressively, and they have not been building out infrastructure in meaningful ways. And you could see that over the last two earnings seasons. Now we're getting to a point where I think they're really going to relook at all the people that they kept on during the last 3 years. It was politically difficult to do a layoff in the time of COVID. Let's just say it. And now I think companies are looking at, and they need to do this. This is a natural thing. And looking at where they're going, the skill sets of the people that they have, and they are going to reduce headcount in many cases. In some cases, they'll increase headcount, but it will be a shifting of the workforce, and this needs to go on. Why it will look as though everybody's doing it now is because, well, COVID's over, and there are no more policies that are making you keep people, right? So that's one thing. The other thing is, and this is controversial, and I'll just lob it out there, part of me, the engineer part of me, does not believe that the interest rate increases are really affecting businesses other than where they borrow. And they rarely borrow anymore, right? That the really big companies issue bonds and kind of take the rates that they can get. Now, what I think is happening is that the economy is, we had a recession last year, and we're coming out of a recession. So there's some crazy ideas for you. And I think that, time will tell if I'm right or wrong.
Wow. Okay. Michael, your thought.
Yeah. So Kim and I are long friends, so I can say this. I disagree with her a little bit on terms of the interest rates not mattering as much to companies. Yeah, companies do issue bonds, but again, issuing a bond at 6% is a lot worse for a company than being able to issue a bond at 2%. So I do think that's going to have an impact on companies going forward, maybe not to the degree it might have had in years past. But nevertheless, with the cost of capital increasing a bit more, you're going to have less of an opportunity to expand your businesses or use those proceeds for working capital. Yes, Kim is right that you're going to continue to see layoffs abound. And you're really seeing that, and Kim will definitely expand on this if need be. That's really happening the most in tech heavy companies and financial services companies, where employee headcount was severely bloated. You saw that with Twitter, right? Elon Musk cut 85 to 90% of the workforce of Twitter, and it's still up and running somehow. So I think you're going to continue to see that in select services and select industries, but nevertheless, the labor market still remains tight for the vast majority of industries out there. And I expect that to probably remain the case in the quarters ahead.
All right, we had a little disagreement. Carrie, which side do you fall on? Or do you pave a new path?
Well, Kim and I are friends. I don't really know Michael. I mean, I think we could be friends given the opportunity, but for now I'm going to disagree with him. I actually fall on Kim's side, where I don't think that rate increases have really had a significant impact on corporations or the consumer. And how we gauge that is by the debt to income ratio. And when we look at the amount of debt versus the amount of income, we're actually at pre-pandemic levels. So we haven't, people and companies haven't really so much felt the effect of it as of yet. It is definitely ticking up though. So I would say that, and to Michael's point at the first segment, we really have to watch profit margins. That's really where our eyes are going to be during this earnings season.
Okay, Frank.
Profit margins, that's an interesting concept, isn't it? we had what I would consider outsized profit margins going into this period. And I think we're going to see them shrink because the cost of materials as well as employees are rising. And at some point in time, there will be pushback by the consumer to spend money. Even I am noticing with dinner costs to go out. I mean, it's getting ridiculous, and I don't mind cooking, so I think that we'll go out less, and that means inflation is going to start taking its toll on consumers at some point in time. Interest rates, on the other hand, I think are right now, historically speaking, they're still low. The anomaly was what happened in 2020 and 2021 when we had zero interest rates. That was the bizarre time. This is rather accommodative, quite frankly, historically. If you have a business concept that can't handle a 6, 5, 6, 7% interest rate, it's probably a bad concept. So I tend to agree with those lean on the side that I don't think these interest rates are a big deal. However, as I said before, money supply is shrinking. That is deflationary. And that, I think, if it continues, I think that will have more to bear than whether we pay 5% or 6% in overnight rates.
I find one thing you said there, Frank, very interesting, and that is that you said that you're probably not going to go out to eat as much as you had before because of the price of things. Carrie, I'm going to go back to some Carrie,
Stacy.
Pardon me?
Unless you're buying.
Unless I'm buying, right. Well, we know how that rarely happens. Carrie, so many episodes ago, you talked about how you were going, I think it was on McKnight Road around the Ross Park Mall, and you said it was just packed. Frank's saying things are starting to cut back a little bit. How do you view it?
Yeah, I want to go back to answer that question to something that Kim said, which I think is really insightful, and that is that we're coming out of a recession, right?
Yep.
So are we or aren't we? And the reality is that the economic data is backward looking. So, and the stock market is forward looking. So when you look at stock prices having gone down last year, they're beyond these things we're talking about right now. Stock prices are actually looking to the future. And that's where this dialogue about, when is the Fed going to pause or cut comes into play. So I do think, it's really interesting where people are spending their money, because we just planned our summer vacation and flights are booked. Like, it's crazy out there when it comes to some segments of the market. Some of this, I guess, pent up demand. So, I do think that people are picking and choosing. If they can eat at home, they're going to eat at home so they can take that vacation.
Okay, good. We have to take a break. We'll be back in just a moment.